Hey, good morning. It's Edna here live with Free Coaching Friday. And today we're going to talk about how to get investors to invest with you. And I honestly believe that educating them is the best way. Most people, when they're starting out, don't understand real estate. I know even being a financial advisor, and a lot of people thought we knew everything, but the fact was I was trained to sell mutual funds and life insurance. That was it. I didn't know anything about real estate. I knew it was a good idea to buy my own home and get the mortgage paid down and all that sort of thing. But other than that, I really didn't know much about it. I still remember telling one of my clients who came in to ask me about a potential real estate investment, why would you invest in real estate? It's an asset class that only pays you like 3% a year, because I was thinking like inflation, right? Did not understand all the nuances, didn't understand cash flow, having your tenant pay down your mortgage for you, forced appreciation, all that stuff. I just didn't get it. So if I didn't as a financial advisor, you can imagine that most people don't get it. So you have to educate them. And I always start with a question when I'm meeting with someone is, where do you think your biggest net worth increases came over the last 15 or 20 years? And most people, hey, good morning, Janelle, good morning, TJ. Most people will say their house. If they've done a refinance or just if they even track their net worth, which a lot of people don't, they'll see that their biggest increase is through their mortgage pay down and the appreciation on their house over the years. And, I remember our biggest growth in that asset class was just before we started investing in real estate. In Regina, Saskatchewan, we had a huge growth spurt in real estate. And a property that we bought in 2002, the house that we lived in, we bought it at $222,000. And when we went in to refinance to look for some money to buy rental properties, we had it appraised at $400,000. That was in 5 years from ownership. And we were just lucky that we had we'd actually bought a house double the value of the house we lived in prior. And after I figured that out, I wish the heck I would have just kept our last house. It wasn't perfect for a rental, but it made me think, geez, I wish I would have just kept that. But again, we didn't understand it. We didn't get it. We weren't educated. So when you're talking to potential investors, you have to educate them. You have to give them the upside as well as the downside, because we all know that there's downsides in every single thing you invest in, even your guaranteed GIC investment certificates, because with them, you're basically guaranteed a loss. You take your inflation and taxes into effect and you're basically going backwards. So there's your risk. With real estate, we need to talk about, the potential, definitely, but also the risk on the way to that potential, because sometimes you go through a market correction, you have cash calls, you have vacancies that you have to deal with, you have tenants ransacking your place, you have fights with the ORT because they feel the tenant's in the right and we feel we're in the right. Like there's a lot of stuff that goes on behind the scenes. So as I've mentioned to my students before, as a joint venture partner, you're worth every penny because you have to deal with all that stuff. So a lot of times investment partners will think that their money is the most important part of the deal. And their money is a very important part of the deal. We couldn't do the deal without the money, but you're also a very, very important part of the deal, because the deal couldn't happen if it wasn't for you either. So remember that when you're talking to a potential investor, tell them all the things that you got to do. And at the beginning, you may not even know all the things that you need to do. I know we didn't. We didn't have a clue what that some of the things that we're doing now would be part of our role in the future. So the more that you can educate yourself on that, the better off you'll be. So again, the key in real estate is educating yourself, but also educating your investors. Because if you take the time to educate your investor on mortgage pay down equity appreciation, forced appreciation, tenants paying down your mortgage. Did I say that? Tenants paying down your mortgage, tenants paying down your mortgage, tenants paying down your mortgage. That's so important. And you know, over and above your house, because we pay our own mortgage down with our house, right? With our own personal house. But if you've ever read any of Robert Kiyosaki's books, one of the things that he teaches people as a wealth building exercise is buy an asset that somebody else will pay off for you. And real estate is one of those assets where that'll happen. So if you spend the time educating your investors, they'll get it. And most of them will understand, even when you're going through a downturn, that, you know what, eventually we'll come out the other side and we'll be happy that we invested there. Please don't forget to tell people the downside. And you have to reiterate the downside, even in the good times, because it will happen and everybody will be shocked by it, because you always want to be optimistic, right? But you have to reiterate that. And the other thing I learned is when people would give me credit, and even with mutual funds, when people used to give me credit and say, wow, you did really awesome, Edna, you earned me like a 12% return this year, that's awesome. And I would say to them, I didn't do that. You know, the market does a lot of it that we have no control over. So don't take the kudos with the up market if you're not going to take the exact opposite with the down market. Really, there's a lot of things that happen that are beyond our control. We can mitigate the risks to the best of our absolute ability, and there will still be risks involved. And people have to be aware of that, and they have to be able to live with that. And you know, some people can't live with that. They think they can live with that when the market's doing good and they hear about everybody getting into real estate and everybody making good money on real estate. But when the market turns and it's not so good, some of those same people will turn out to be nightmare investors. So keep that in mind too. But it's up to you. You know, you have to manage expectations. If someone, even now, people will say to me with my course, my 90-day to 5K course, people will say to me, so when I'm done your course, I'll know absolutely everything about real estate? No, you won't. There's not a course out there that will teach you absolutely everything. Because some of the stuff, there's new stuff happening all the time. Like, if you think about it, how many years ago did you very first hear about Airbnb? I heard about it for quite a while before I ever used it. I think the first time I used an Airbnb property was when we went to Fort Lauderdale for a mindset retreat, and a whole bunch of us went. I think there was like 12 of us in a house. So of course we are all sitting there calculating what this guy's making on his house, or woman, whoever it belonged to, because we were paying $1,000 a night. So if you imagine between 12 of us divided up, that was pretty cheap accommodations for us. But we started thinking, because the one thing that they told us is you got to be out at the 11 o'clock on such and such a date because we have new people moving in. We're booked solid. So what that meant is the day we moved out, they had new people moving in. And for 30 days or 31 days of the month, they were booked solid at $1,000 a night. So we quickly calculated that's $30,000 a month. That's $30,000 a month that this guy's making on his house. And you know what? It was just an average house. That house in Regina would maybe sell for maybe $400,000 because it was an older house. It did have a pool in the back and a nice yard, but it's Florida, right? So I don't know what it would have been worth. But if you think about that, I know even say $1 million home, your payment's like $3,000 a month. Maybe, you know, I'm not sure, depending on how much you mortgage, of course, but let's say it was $5,000 a month. That guy was making $25,000 a month on his Airbnb. And even then we could see, well, that totally makes sense, but we couldn't understand how to get into that market. Like, we didn't know anything about it. So Guess what? We took a course and now we know lots about it. Do we know everything? Absolutely not. Because you know what? Every time you think you know everything, new stuff will come out that'll totally change the rules. So you have to continue educating yourself. You can't just educate yourself once and think that you've got it handled. The markets change, the rules change. Look at all the people nowadays trying to buy their first home and they can't qualify. And 5 years ago, they would have easily been able to qualify. Markets change. So you can't learn everything in one course or one person. Talk to as many people as you possibly can. When you're educating your investors, talk about your learning curve. Talk about how you started studying and what you started learning, and realize also that if you've been doing this for, even 3 years, you've learned a lot. You can't give your investor everything in one meeting either. So, think of different ways you can give it to them. Facebook Lives, regular meetings with them, newsletters. You can share articles that you read with them, stuff like that, that talks about, the power of real estate long term. That's something we like to share, in the good times and the bad times, the power of real estate long term, that we can come out the other side if we manage this properly and everything will be fine. But you do have to talk about your worst case scenario. So that's not always easy to do. So education, and there's many different ways. There's so many ways nowadays. There's podcasts and there's Facebook Lives and there's just straight videos that you can post to your website. There's courses, there's books. There's, I listen to podcasts all the time and I learn something new from different people. There's so many different creative ways to put a deal together. To get paid on a deal and to make your investor client capital and returns and all that sort of thing. So if you don't continue educating yourself, you're going to miss out on a lot of that stuff. And you know what? Don't be scared to partner with somebody because you can't do it all yourself either. We're at the point now, we've got over 500 doors. We have to have partners that can manage things for us, bookkeepers that can do your books, operations managers that can stay on top of property management and the trends in that area. You have to have a team to make it work. And I'm constantly networking and masterminding with other investors to figure out better ways to do things. How can we, do the absolute best we can in a down market, in a market where we're experiencing high vacancy? What else can we do? I know 2 of our buildings, we've set up Airbnbs in them and they're doing really well so far. So will we do more? Possibly, but we want to test it out first because it does cost quite a bit to set it up. And there's also management involved. So the other thing we're doing right now is figuring out our bottom line. So I think we first opened our Airbnb in February. So we're monitoring. Okay, we know the income, but what's the outgo? There's cleaning expenses. There's cleaning supplies. There's internet expenses and TV expenses and managing expenses because we don't go in and do all our Airbnb ads ourselves. We hire somebody to do that. So all that stuff costs you money. So you have to figure out what you need to do to make money with it. The course I'm taking on it right now, which is so interesting, is a landlord like me who has a building close to a hospital, and they might say, you know what, I'd like to rent your property for such and such on a long-term lease, 1, 2, 3, 5 years, and this is what I'm going to pay you. And then I'm going to take care of your property. I'm going to use it as a short-term executive rental. I'm going to furnish it. It's going to probably be cleaned once a week. I'm going to take care of all the maintenance issues under a certain dollar amount. Your place will never be better cared for. And I have lots of insurance if anything were to happen to it. So these are the kind of things we're learning. You never say never. He got into tax liens and tax deeds and bought all kinds of properties. I think he was telling us the other day on one of his calls that he bought $1 million property for a $6,000 tax deed. So he's got a real brilliant system, and he systematized it, and he's teaching us how to systematize it. And it's so interesting. It's fascinating. Just another way to make money in real estate. And what I think is really cool is, like, even though we own a ton of buildings, I think it's so cool that we can do this with other people's properties. So you've heard me talk many times using other people's money, other people's knowledge, other people's talents. Here's another thing, and using other people's properties. And you know what? The landlords will be happy